Alright, so I'm gonna test the volume first. So let's just wait to see if I can hear anything. Alright, so I'm gonna test the volume first. So let's just wait to see if I can hear anything. Okay, it's done. So let's start. Right, so for this upcoming week, we have CPI on Wednesday, right, 13th of September. So far, right now, I am 50-50. Okay, I can justify bullishness and I can justify bearishness due to the fact that we have traded quite deep into this BC here, especially on ES. Okay, so short term wise, I'm looking at the buy side here and the sell side here. Okay, um, if price starts to trade below the sell side, then obviously I will look for bearishness to attack the lows here, and then eventually into um, an old inefficiency or an old low down here. Okay, that's for yes. For Nasdaq, it's a little bit better in terms of right here we have relative equal lows and inefficiencies on the monthly chart as well. Okay, so if we trade above the buy side liquidity, then I'll look to take out this high here and maybe trade up into to close up the inefficiency on the monthly time frame above. Not sure if it's monthly or weekly, but there is a inefficiency that has yet to be filled fully. So I would target that for next week. Okay, so Monday and Tuesday, I'm expecting accumulation before CPI, and CPI should be the manipulation, and then on right after CPI, and then following Thursday and Friday, I think that's where the high probability setups would form. So that will be my focus for next week. Okay, so right now 50-50 on the indices. Okay, on the higher time frames, obviously I am leaning bullish due to SMTs on lows, and we have a monthly inefficiency and a monthly shift in market structure. Okay, so keep in mind that we're bullish on higher time frames, and we just have to see how the daily time frame wants to print. Okay, so that's for the indexes. Right, so moving on, we have dollar. Right, and previously I've mentioned many times before, I'm expecting dollar to trade up into this monthly inefficiency here. Okay, so that remains to be the target, and I want to see a I don't want to see price respect this as a bearish fair value gap. What I want to see is price trading and eating up above the fair value gap and eventually into this high here, and then we have a old high that is right here. Okay, so long-term dollar bias still remains bullish. Okay, so that's for dollar. So if I'm expecting dollar to be bullish, then obviously that caps the upsides for indexes. But then again, it doesn't have to um, move in tandem with the dollar, right? As you can see from July onwards, right? Um, it's moving together with the dollar. As the dollar rallies, indexes are rallying as well. So it's not an it's not a iron fist, ironclad movement as compared to the foreign currencies. So that is what I'm expecting for DXY. Okay. I would much prefer to trade when they are both in sync, which means the indices are moving inversely with the dollar. That would be very. That would be a nicer in terms of. That would be nicer in terms of market synergy. All right, and moving on, let's head over to gold. Gold. So obviously, if dollar is bullish, then expecting gold to retrace further down, right? As you can see right here, we are expecting this CB, and then we trade up all the way into this auto block here, and then as you can see, the price closure is below this inefficiency right here, which if you're bullish, you want it to become a inverse fair value gap. So I think following candles, we should take out the lows here and then eventually close up this inefficiency here, the lows here. And we have another small inefficiency down here. It can be traded in two as well. That's for gold. So bearish on gold. Bitcoin, I don't think I want to talk too much about Bitcoin until it gets moving. So far, as you can see from the chart right here, nothing much has happened. Okay, it's kept within this range. So um, if I'm to force a bias, I think a sweep of this lows down here, maybe into this area here before a full breakdown. Okay, that is for Bitcoin. But do keep in mind that on the futures chart, um, this high here event has tapped into this high here. Okay, so that I mean, just take note of that. Right. So moving on, we have um, let's start off with all the majors first. HSI. Okay. All right. So far HSI it's moving according to script. All right, as I wanted to see. Right. This is a bearish fair value gap, so I wanted to see respect of this area here. And right now, the week closure below this fair value gap, I'm expecting the next few candles to be huge down close candles to take out this sell stop here and then eventually this sell stop right here. Okay, so once it takes out this swing low, I want to see speed to take out this swing low and then eventually into a monthly volume imbalance right down here. All right, so that is what I want to see for HSI. And moving forward, let's head over to Tesla. Okay, so for Tesla, let me just remove the drawings here. So for Tesla, right here was the BPR that I have annotated. Okay. So for Tesla, because I am bullish on the XY, probably gonna see further retracements on Tesla, and especially the weekly candles closing like this. Okay, respecting this bearish order block, propulsion block. Okay, so what will invalidate this bearishness is if price can trade above the mean threshold of this order block, which would be 263.51, right? So if it can step up into it and then close above this mean threshold here, then I would be thinking the buy stops here will be next. Right, so I am leaning bullish on indices, but at the same time, dollar is how to say, dollar is rallying, so it's kind of conflicting. You just have to play with what the algorithm provides. Okay, so buy stops here. I'm just gonna annotate it. Buy stops right here. right? So because I'm bullish, I'm just gonna highlight the buy stops. Okay. So how far can Tesla go, right? So from the lowest closing to the highest closing, I would use this projection right above the swing high. That would be more than enough to be the top, but I want to see if it is able to close above. If so, then I'll be looking for all-time highs for Tesla, maybe to the fifth standard deviation, because the fourth standard deviation here is just this old high here. We have um, relatively equal highs in the vicinity, so I'm expecting that to be attacked if it is going to remain bullish. Okay, so that's for Tesla, right? Um, so far sidelines as well for sidelines as well, similar to indices. All right. So next we have Palantir. Palantir. Okay. So for Palantir, I would much prefer another sweep of the lows here. We have relative equal lows, right? Another sweep down would be perfect, and then we can rally. So far, um, nothing much yet for Palantir. Okay, I'm just gonna keep this all the way to 2024 and this as well. Okay, so let's move on. Um, what else? What else am I interested in the U.S. stock market? I think for now that's it. I'm not really interested in anything. Oh, I'll just cover one Disney here. I covered it last week. So for Disney, right, moving very nicely to my objective right here, which would be a fifth standard deviation around 74.08, okay, to be precise. So we open with a gap here on the monthly time frame. So it's a it's a good indication that it's going to go lower, right? We have relatively lows here. I believe that's going to be the next objective, and then I want to see it overextending to 74.08. Okay, and I think that's it for US indices. If you have any stocks that you would want me to cover, then you can leave it in the comment section down below. I will cover it in the next week's um, analysis. All right. So now let's move over to Baba. Baba. Alright, so far nothing as of yet. Even on the weekly chart, it's still consolidating within this little dealing range, right? Alright, so a slight technical issue there, right? So let's continue. So we're stuck within this dealing range, right? From this high to this low. As you can see right here, it respected this bullish order block, and then it traded up all the way to the mean threshold of this bearish order block right here. Okay, swing the high and the low of this candle, and then right here 96.25 is the mean threshold, and if you take the high of this on previous week, previous 2 weeks, right, I would be at 96.68. Okay, so traded traded right up to it, and then you see this breakdown right here. So because I'm bearish on HSI, I am naturally going to be bearish on other Chinese companies as well. So right now I want to see if it really wants to expand below this um, range here. Okay, as long as it's within this range here, I have no hard bias for Baba. Okay, it can just go sideways, and then we'll see how it turns out, right? So if we are having a consolidation year, right, it's been like almost 3 quarters of consolidation and accumulation. So if that's the case, then we're gonna expect a huge move in the next year, right? Most probably. Okay, so let's see if it plays out. Okay, so that's for Baba, right? Other than that, I think I will be done for the individual stocks. Okay, if you have any other um, Chinese stocks, you can mention them as well in the comment section that if you want me to cover. Right. Other than that, I'm moving on to treasury bonds. Okay. So usually, if you want a long-term um, horizon of the markets or the economic environment, you would look at the interest rates and the bond futures. Okay. So credits today, right? He highlighted this treasury bond on 6 months. So right off the bat, we have a shift in market structure right here. Okay, so all these years, I think I would consider it as accumulation, and then right up here, this would be the manipulation, and then right now we're having the distribution. So what am I expecting for bonds, right? It's going to keep attacking the lows until it finds a inefficiency or a old low that satisfies the criteria. Okay, so if you take a look at this right here, we have a balanced price range. Okay, so long as price stays below this area, we are bearish um, on bonds. Okay, let's not just use this, but let's use a lower one right here. Okay, so as long as this stays below, like what it's doing right now, anticipate bearishness for bond futures, and if we're bearish on bond futures, naturally we would be bearish on indexes. So, but there's one caveat to it is that usually there would be a delay between these two assets. Okay, the bonds and indices, right? How long and how much of a delay? That would be around 6 months to a year to see it move in tandem. Okay, so um, naturally, how does bond moves, right? Higher interest rates, lower prices for the bonds. Okay, very simple here. So how far can this reach into, right? If we were to just use the standard deviation of this high to this low, we would most probably want to take out this low here. Okay, so right down here, one standard deviation. If you use this method right here, one deviation would be here, and then 1.5 would be right around here. So let's see, negative 0.5. Right, let's just use a negative 0.5. Right, so we are close to it. That would be this swing low right here. Okay, so I'm expecting this low to be attacked. Okay, so how much is the low here? 11626. Okay, and then I want to see if it wants to further extend lower into the 1 and then 1.5. But so far, right, this seems to be the most optimal target for bonds. Okay, so on the yearly chart, let me just look for inefficiencies that are obvious, if there is any. Okay, we can fully cover this BPR here if it really wants to. It would be at this low right here. Okay, 6 months, 3 months. Any inefficiencies on 3 months? Not really, right? But on the 3 months, you can see we have relative equal lows down here. Okay, so that would be a potential target as well. What about 1 month? 1 month, no inefficiencies. No inefficiencies. It's quite efficient for the bond markets. Okay, so the most obvious one that I can see, it's this area here, 103. So that is a potential target as well, but in the near term, I'm looking at this low right here, 11626. Okay, that's for bonds, right? And we head over. Let's go um, to the interest rates. So interest rates, I'm gonna chart them the same way, which is gonna lead to higher prices. Right. So the next array that it's probably gonna reach to it would be this inefficiency right here. You have a swing high just below it, so I think this is perfect, right? So far we have reached into this inefficiency, right? And as you can see, it's inching deeper and deeper into it. So I believe this is gonna in turn become a inversion fair value gap. And when it does that, it's gonna attack this inefficiency right here and this old high right here. Okay, so as you can see, we have a 2022 mentorship, right? We have low, lower low, and high that made the low here. Price is closing above, right? And then it's moving higher. So if I am too long, I would use the breaker. Okay, the breaker right here. So any return into this breaker, that would be that should be, I mean, that would be indicating of a strong reversal, right on this breaker here. But if it does not return to this breaker, then it's probably way more bullish than expected. Okay, so this is the 10-year yield. Okay, this is on the 6 months chart. So if you want to go down to the lower time frames, I've actually noted down this monthly fair value gap here, right here. So if you take swing low to swing high, okay, let's remove that 0.5. Let's see. Yep. So that would bring us to right about here, 2 and 2.5, right? If the inefficiency right here above this highs. So that is what I've annotated for the yield. Okay, we have this fair value gap here. As you can see, the red dotted line is the consequent encroachment of the fair value gap. No closures below it, which is really bullish. Okay, and this fair value gap lines up nicely with this breaker. Okay, nicely. All right, so this is the what the students like to call it, the unicorn setup. All right, so yep, higher yield, higher dollar, low bonds, bearish for indices. Okay, and I think that's all for this week. All right, I might give an update on Twitter after CPI, but Let's see how it goes. Okay, no promises. And let me just double check here to see if there's anything I want to cover. Right, and how about I just show you the levels on NQ that I'm looking for on higher time frames. Okay, so what I was saying about an inefficiency above this swing higher would be this area here. Okay, this inefficiency here, and right above this inefficiency, that would be the all-time highs for Nasdaq. Right. Judging off the closure of the weekly candles right here, right? This is the continuous contract. Okay, what I have used before in the earlier part of this presentation was the December contract. Okay, so there is a slight difference in pricing here, which is why you see like let me show you what happens on the daily chart right here. Okay, so this is something that the price difference would create. So it looks really bullish on the continuous chart. So yep, continued bullishness, and I will look for this high here. Okay, I mean not high, but inefficiency here, and eventually this highs here. That is for Nasdaq, right? For ES, nothing much. Actually, ES is just trading above this high and then breaks lower into a discount monthly time frame. Right, the next PD area, I think it would be the mean threshold of these two up close candles, and then eventually the old highs right here. Okay. Right, so on the monthly chart, as you can see right here for ES, okay, this inefficiency here, right? I think as long as price stays above the consequent encroachment of the week from the month of August, then there's no how do I put it? Okay, as long as it stays above the consequent encroachment, we are bullish. No, not we, but I am bullish. Okay, right here, as you can see, I think it just hit that 4435.75. The low is 4434.25. Right, right. So the accuracy and precision is really unmatched. Okay, so as long as we stay above, bullish. Right, stay below, then maybe we can attack the consequent encroachment of this monthly fair value gap here. For NQ, same thing on the monthly chart. Okay, this fair value gap here coupled with this inversion, so naturally you do not want to see any body closures below the inversion. It can wick through, but you don't want to see any body closures below. So that is for Nasdaq, which is why in higher time frames Nasdaq it's leadership in bullishness. Okay, so I think I mentioned before how high it can go, and just use the last swing low to swing high, the inception of this move here. So we have this highs and lows. Okay, right here 2.5 again, and then decline. Okay, so right here, and then fourth would be right here if you can close above 2.5. If we were to use this low here, okay, because right here we have SMTs with S&P 500. Okay, so that would be around here, the fifth standard deviation. Okay, that would be enough for a top, right? If it really wants to go further, then you can look for 3. So the -7, it's a little bit extra, so I'm just gonna leave it out first. Okay, so that is for NQ on how high it can go above these all-time highs. And for ES would be right here highs and lows. Okay, barely reached into 2, right? Still at 1 to 1.5. And then, okay, this is the lowest low, so I'm just going to use this as an inception of the move. Okay, so how high can it go? 2 and 2.5, right? This range here. So in terms of NQ and ES, yes, it's more bullish above all-time highs as compared to NQ. Okay, that is what I am predicting if we were going to continue this bull thread. Okay, right here there's SMTs on ES and NQ, right? In any way, if NQ manages to take out this high and ES does not, that will indicate super bearishness on ES. Okay, and then we shall see what happens from there. Right, so far it's a little bit far-fetched, right? So I hope you enjoyed this session, and if you find it helpful, insightful, or if you find it interesting, right, do leave a like and be sure to comment on, leave any comments of any company tickers or stock tickers that you would like me to check it out, right, on my next session, because I'm just going to cut off quite a few to lower down the duration of the videos. Okay, right, and right, so that's it for this session, and have a great weekend, right? I hope you find, I hope you enjoy the weekend, all right, with your families or with your friends, and right, I'll sign out now.